right, so we're going to talk a little bit more about blockchain, Bitcoin, where it's all going. I know you just heard a really super interesting talk about blockchain from Brian, and so hopefully we can build on that. My name is Bill Barheit. I'm the CEO of Abra, which I'll tell you a little bit more about in a minute. Would like to introduce our co-panelists here. To your right here is Ben Milne. Did I say, is it Milne? Milne?
I just dropped the E.
Okay, Ben Milne is the founder and CEO of Dwolla, which he started about 8 years ago, which I'm a very big fan of. Dwolla provides an online payment system and mobile payment network allowing developers to access the US banking and payment system directly via Dwolla's APIs. Is that fairly accurate?
Yeah, I'd say that's good.
Okay, and also to Ben's right is Catheryne Nicholson, is the CEO of Blockcypher. So I liken Blockcypher to Amazon Web Services for blockchain. Is that good? Okay.
Indeed.
So, all right. So Catheryne has, I think, a super interesting career. Several years in the U.S. Navy, and also after that, long career in enterprise software at Siebel, PG&E, among other places. And so also for myself, I've been in software for 25 years. After working for the government, I was here at Wall Street at Goldman for a while, and have been working in internet systems since then. Developed the first credit card gateway at Netscape. We had our 20th reunion last year. So for those of you who remember Netscape, yes, it's been 20 years. And have been working on mobile banking services for the past 10 years, particularly interested in kind of unbanked consumers and developing markets. But the last 5 years at Boom and Abra have been very focused on developing P2P models to allow consumers to transfer money at low cost globally. So let's get right into it. Let me ask both of you a question. What does blockchain mean to you? Because I hear every time, you can ask every person in this room and you'll get a different answer. But what does it mean to you, Catheryne?
Well, so here in New York, you can only say blockchain, right? B is the big B is the.
Well, we'll get to that in a second.
Blockchain to me is the underlying technology that powers a cryptocurrency like Bitcoin and Ethereum. That's basically it. It's immutable. It's permissionless. Anybody can participate in the system, and it's something that has been tried many times, but has never succeeded until now.
And why do you think it's never succeeded until now? I mean, what is the?
So the first successful cryptocurrency is Bitcoin, and it's theoretically non-perfect, as we all know. There are many opportunities for improvement on it, but oftentimes things that aren't theoretically perfect work well practically. And I think that the convergence of, as Brian was talking about, the financial crisis and having something happen on the heels of that, which is Bitcoin, gave it that platform in which to succeed. And so I think it's partly the timing and partly the necessity of having something available for the world is why it succeeded now.
Right. Okay, Ben, same question. What does blockchain mean to you?
I think just generally speaking, it's easy to think of it as a immutable distributed database. Mm-hmm. I think one of the key things that makes it relatively unique is that each new entry has a reference to the last and vice versa, meaning in the absence of a reference, it's sort of like a broken chain. And there are a number of reasons that could be really interesting.
Mm-hmm. Yep, I agree with that. Okay, so we've been hearing a lot lately about blockchain versus Bitcoin, or Ethereum versus Bitcoin. Catheryne, you made an interesting announcement this morning regarding Ethereum. So first of all, what is Ethereum? Mm-hmm. And what is Blockcypher now doing with Ethereum, and why should everyone here care?
Yep. So Ethereum is the second largest open blockchain, second only to Bitcoin. It too has a cryptocurrency. I've heard many bankers say, well, we don't like the cryptocurrency aspect, we don't like the monetary aspect of it, but Ethereum does have an Ether, which is equivalent to the Bitcoin. However, the primary the primary goal of Ethereum is actually to create smart contracts on blockchain. So while Bitcoin was designed solely as a cryptocurrency, Ethereum is designed with a smart scripting language which allows you to do those contracts on blockchain.
And your announcement today?
Oh yeah,
with
yeah.
that,
So we announced this morning. So we're like AWS for blockchains. We're blockchain agnostic as far as our web services are concerned, and we were hosting Bitcoin and Litecoin and Dogecoin along with private chains. And this morning we made the announcement that our web services now support Ethereum as well.
Yeah, and why would people on Wall Street, for example, care about Ethereum? I mean, what should get them excited about this technology?
Well, get them excited and also get them fearful about this technology, because basically it allows you to do all sorts of things that typically required a middleman. Required multiple parties of trust in order to execute. And what Ethereum does is enable you to do that in a smart contract way, but do it on blockchain, so you don't necessarily have to have a person or an entity be that trusted party. It can actually execute based on whatever parameters you set forth within that contract.
Right. So I was reading about an interesting example that I'll give you. So in the U.S., CFDs, contracts for difference, I believe, are basically illegal as long as there's a central broker bringing parties together. But in the U.K., the market is wide open and very common. Now, it's not illegal for any two of us to make a contract directly betting on the weather, as I understand it. But if there's a central broker doing that, it's illegal. But imagine a system where any two parties on the internet could effectively enter into one of those contracts for difference with no central clearing, where you basically make a bet that Apple stock is going to go up. I make the same bet that Apple stock is going to go down, starting at the current strike price, and at the settlement time, we simply receive the payout in any cryptocurrency, whether it's Bitcoin or Ether or some future central bank issued currency. And effectively, governments can't stop it because there is no central clearing, and it settles directly on a public blockchain. So that's one of the more interesting, kind of straightforward examples that I've seen. In theory, that bet could be on absolutely anything as long as there's an agreed upon method to see what the outcome is at the end, such as what is the strike price of Apple, 6 months from now. And so for people who are in countries that don't have easy access to centrally cleared markets, this type of model becomes super interesting. So I want to talk about just quickly the flip side of that. So Ben, what do you think are the kind of the key non-financial applications of this type of technology?
Well, I think even before I go into that, one of the things I think that you mentioned is you're talking about sort of settlement and clearing, and I think that that's an important element to talk through, because, I mean, how many people in the room have ever purchased crypto in any form? How many people in the room have ever purchased stock in a public or private company in any form? Okay, so you guys know that when you take ownership of that asset, you pay with what? Does anybody want to tell me? How do you pay for that asset? It's cash. The dollars in your bank account. And so a lot of these new systems are really empowered through their connections to actually existing the financial infrastructure that we use for everything else. And so I think it's important to sort of keep in mind that that connection is incredibly important, because if that connection is severed, these new systems don't exist. So there's a lot of ramifications that sort of need to be considered, but I also think it's a really exciting time because financial markets are coming around to how do we embrace these new technologies and not fight them? How do we monetize them as FX opportunities, as new product lines, actually serve new types of businesses that weren't built in the past? So even though it may feel very confrontational between the existing financial institutions sort of that have been around for 100 years and new companies that maybe have been around for 6 weeks, it's all of a sudden very collaborative. There's an opportunity for people to make a lot of money, which is good for business. The applications for the underlying technologies like blockchain outside of finance, I think, are really interesting, because when you take an immutable database and you make knowledge available to everybody in the world for free, that's pretty cool. I mean, theoretically, archive.org, how many people in the room have heard of archive.org? It's sort of like a backup of the internet in mass. There's lots of things on the internet that are not there anymore. If you were sort of recently following Muhammad Ali's death, there's all these articles that were so beautifully written in the 70s that all of a sudden they don't exist, and when you go to the web page that's supposed to be the archive, it says file not found. A lot of the stuff that people are producing now is going to live in immutable databases and be referenceable 100 years from now from whatever reason, and maybe not by a human, maybe by a bot. I don't know what the applications are, but I mean, it's Singularity, right? So might as well bring up AI.
Okay. So, and Catheryne, same question. What are there non-financial applications of blockchain that also get you equally excited? Or
Yeah. So I think identity management on blockchain is something that has the potential to change everything as we know it. I mean, if you look at all of the agencies, Department of Homeland Security, where it boils down to really is, are you who you say you are? And if we can solve that, because identity theft is on the rise, but if we can solve that, it's something that's going to be super powerful, I think.
Yep. Yep. Okay. And kind of the typical elephant in the Bitcoin room, right? Is Bitcoin bad, blockchain good, right? What does that mean? Does that?
I just, how many people when they sign up for, like how many people have PayPal? Like to ask a lot of questions to figure out the audience. Did you read the terms of service to figure out what database structure PayPal uses to store your data in? No, of course not. At some point, blockchains are going to be the sort of best tool for the job. Developers are going to choose them, companies are going to choose them, and they're just going to become a part of the experience. And I think when that happens, it's going to become more clear that these two things are separate. One is a currency, one is a storage type.
Yeah.
So I'm going to diverge a little bit from that, because I think what really makes blockchain disruptive is you have an entire network that's validating, and they don't do it for free. They're being incented to do it, and their incentive is a Bitcoin or an Ether. So if you remove that reward, what is the incentive for that entire network to secure it? And so there's a lot of chatter, particularly on Wall Street, about distributed ledgers. And I often wonder, what is a distributed ledger? Is it a blockchain? Because to me, the distributed databases have existed since the 1970s. There's nothing necessarily disruptive about that. But where blockchain comes in is the miners who validate all the transactions. They group all the transactions into a block. They add it sequentially to that block, hence the name blockchain. But that's really that whole network of miners that's validating the transaction is what's fundamentally different between a blockchain and a database that's distributed.
Yep. So I ask a lot of people this question, and I get a million different answers. But I mean, at Abra, we use the blockchain. I liken it to TCP/IP for money, right? So at Netscape, we used to talk about the browser as being kind of a front end on TCP/IP, right? So that you didn't have to understand. You could surf the web with Telnet if you're so inclined, or you could use a pretty web browser and click and point and surf to CNN.com. And the same thing holds true for Bitcoin, right? And so we actually allow you to hold real dollars on the phone, but what you're actually holding is hedged Bitcoin in the background. You just don't even know it. And so now the consumer has a very easy, efficient way to move money around the world. But ultimately, the blockchain, as far as I can tell, was created to solve one problem, and that was the double spend problem, right? Because there's been dozens of attempts over the last 30 years to create a central clearing for digital currency that you could store on your hard disk, right? I mean, DigiCash in the mid-90s allowed you to store money on your hard disk. It's just that the clearing had to go through DigiCash. And so it failed because nobody wanted to trust DigiCash because there was no benefit to trusting DigiCash versus a bank. But all of a sudden, with the Bitcoin blockchain, you didn't have to trust anyone, but there was no risk that two people could spend the same money. Because with DigiCash, if both parties had a copy of the money, they solved the double spend problem by forcing everyone to trust them, whereas in the Bitcoin world, you're not trusting any one party. Is that more or less accurate?
Yeah, I think Bitcoin was a political stunt that sort of like mathematically somebody's saying, well, stop me from doing this. And I mean, you can't stop it. It worked. And I wonder how many of those decisions were made in the software or in the design of it that were made in a sort of the way that we look at it as a complement now rather than being made maybe as a reason to sort of avoid taking ownership over it, so that once somebody takes ownership over it, obviously it can be stopped.
Yep.
There's a single actor that can be removed. I just think it forces all these interesting intellectual conversations that how they play out. I still have no idea. It takes people much smarter than me to figure that out.
Right. Right. Well, its market capitalization is $9 billion now, so I think it's clearly beyond the stunt phase, right?
It is, but if we think about banks that have a sort of a deposit base of 9 billion, they're regional banks that won't even register on people's radar in this room.
Right.
But we're talking about that as a sort of proof point of a technology that we don't know what will happen. And so comparatively speaking, it's still very small in the world,
Absolutely.
but the amount of intellectual mind share it's taking up is massive. And that creates new innovations and new ideas, and out of that, new things will happen that, again, I have no idea what will happen. I think it's going to be cool, though.
And I think the hashing rate, too, besides just the market cap itself, the value itself, is like there's so much compute power that's been backing it for so long that it will be very difficult for anybody just to say, well, we're just going to turn it off.
Yeah. I remember reading a stat when Bitcoin was trading at around $2, which was, I don't know, when was that, 4 years ago, that the combined hash rate of the Bitcoin network was already made it the fastest supercomputer in the world, and that was 4 years ago. And obviously things have progressed significantly since then. I know at least 3 companies that do ASIC chip development specifically to optimize their ability to mine Bitcoin, Ether, and similar currencies, which is astounding.
Yeah.
Right. So I guess a follow-up question on that is what needs to happen or what needs to evolve in this kind of public blockchain ecosystem, whether it's Bitcoin, Ethereum, R3, or whatever it ultimately gets used? What needs to evolve in that ecosystem to make it more useful to people here and anywhere over the next few years? Maybe both of you comment on that.
I think the UX is still terrible in using cryptocurrencies. I mean, no matter what wallet, I think, Bill, you guys do a great job at GoAbra, but still, every single time, I think it's the most elegant way to send money overseas. You can't do it via any other way, but every single time I do it, I have to double, triple check, and I have this like secret, did I copy and paste it correctly? Are all the characters, the alphanumeric characters correct? And so I do think that UX is one of the huge things that has to get solved.
Right. Right. So that's the kind of the consumer-facing aspect of it. What about the kind of the infrastructure in that world or your world or blockchain? What needs to evolve there?
Yeah, so there are a lot of things in regards to the scalability, and I'm sure all of you have heard about the block size debate for Bitcoin, the very public debate.
Can you explain what that means? 'Cause maybe not everybody is familiar with the
Yeah,
with the
so
debate.
for every block, which is like a page on a ledger, there's only a certain number of transactions that will fit inside that block. The size of it is somewhat arbitrarily limited, and it's limited by 1 megabyte. Okay, so whatever transactions will fit into that 1 megabyte size block is the only thing that will go on that page of the ledger. So the problem is that when you have millions and millions of transactions floating around, they have to wait in a memory pool before they can get mined and put into that block. And so the issue is that, okay, so as the number of transactions goes up, if you don't increase the block size, then what happens? Do the transactions just get dropped eventually, which they will if they sit into that transaction pool for too long of a time.
Right. Okay. I think we have a few minutes. I'd like to open this up to questions. So do we have mics ready to go? We certainly have hands ready to go. Hopefully there's mics to marry the two. Don't see them, but why don't we start, and I'll just repeat the question. So I go back up there very, very quickly, and then I saw you here as well. Oh, we do have a mic. Good.
Thanks. Hi. Ben, my first question is for you. I believe you submitted your response to the Fed faster payments. Are we going to see an asset-backed Fed coin? And Catheryne, to you, with different blockchains evolving, multi-chain, Ethereum, are we going to see interoperability between these two or more blockchains? Thanks.
So is there anybody from the Fed in the house today? Oh, they're everywhere, man.
You just don't know it, Ben.
Right. I'm going to see if they're going to raise their hand. So I would encourage you, anything I say here, obviously go talk to whoever you know at the Fed. But my general read on it is there's sort of already a Fed-issued coin, right? And it's already tracked digitally, and that's the dollar we all use every day. And so many times I don't know that we give the Fed credit for this amazing digital system that they built called ACH and FedWire that drives our entire economy, which moves hundreds of trillions of dollars a year, that if it didn't work, none of us would be able to function. Our country would stop, and so would the world economy. I don't think the Fed actually gets enough credit for that massive digital system, which actually works really beautifully. So I do think they'll optimize their systems, and that's what they're looking to do. There's a lot of cost in batch messaging, which is what obviously they're currently using. And obviously building on new streaming internet technology is going to save them a lot of money. I think that's going to be the major shift. I think batch is going to go away, and real-time analysis and streaming messages are the new foundation. They could use blockchain for sure. They could use some other database type. And I keep coming back to that database type because really that's the thing that's going to drive it. Absent a business case that actually makes sense for the business and derives either savings or new revenues, it's a tool that won't get used. And back to your point of adoption, I think that scaled business case is really the thing missing. I think we're going to find it, but I do think it's still missing.
Did you want to comment?
In terms of number of chains and interoperability, I think if I were to predict that there's going to be a multitude more of blockchains first because they're all tinkering with the different elements in order to experiment. But I do believe that in the future there will be interoperability between the chains that have the most market cap.
Yeah, here.
It's a two-part question. First, just if you can, Catheryne, talk a little bit about what the smart contract structure is exactly and what it means, because I think you used this PayPal example, but at the end of the day, there's still a buffer. There's a credit card company. There's disputes. There's recourse. How do you deal with that in this world, especially when it gets a little bit more complicated?
Yeah, so in regards to what I mean by a smart contract, it basically means a executable language that a computer can be programmed ahead of time to say, these are the parameters that the parties have agreed on, and when those parameters are true or not true, that's when that contract will execute, as opposed to passing it to another entity saying, you be the intermediary to determine, did this actually happen the way it was supposed to? I mean, if you think about it, the entire industry of lawyers is built around the contracts right now and interpretation of the contracts. And I don't think that's going to go away anytime soon, but there's a lot of things that are rote, right, that you don't necessarily require a lawyer to do over and over again, that you can have a computer execute, in which case it saves you a huge amount of time, it saves you a huge amount of compliance costs in order to do that. And so that's what I mean by a smart contract.
Yeah. The term smart contract was created explicitly to represent the idea that something could settle or be enforceable on the internet versus be enforceable in a court. Now that doesn't apply to everything, because at some point the digital world will meet the physical world for certain types of applications, but there are certain types of applications where you don't have to actually go back and meet the physical world, and all of those features can then be theoretically be programmed such that there is no court enforcement required. That was where the term contract came into play. It's a little bit of a misnomer, because really what you're talking about is multi-signatures and software at the end of the day, as it relates to the software piece of it.
One of the things that I think you guys have both made clear and is important is, you've got global infrastructure that's available because you want to use it out of the box because you have the internet. But one of the things that I think is becoming more obvious is that you can have global technology with local regulation, and the onus of things like chargebacks and so on and so forth, they fall on the providers, because those providers are based in a country that has real taxes and has very real laws to follow. Consumer protection, for example, isn't a choice, even if a company building products and services has an underlying technology that could allow you to actually provide a service without following those rules. But following the rules is not a choice. Law is not up for debate. And the onus to follow the laws fall on the local providers.
Right. Let's see. I don't know which hands came up first. I'm going to randomly go over here because you're waving like yeah. Go ahead.
Okay, regarding the capacity issue, why don't we fill the blocks with hashes of the transactions instead of the transactions themselves?
So that's a great question. We can start a whole debate on all the different mechanisms, right. But we won't reboil that ocean. So there is a proposal that's being implemented as we speak, which is called SegWit, which removes the part of the transaction that's repeated over and over again, so that part of the transaction doesn't get counted as part of the entire size of the transaction. So they are trying to segment it in order to squeeze more transactions within that block.
Yeah. It's called segregated witness, and you're actually segregating part of the information away, which is why they call it SegWit, but it's close to what you're talking about. There's other technologies, super complicated, but they're referred to as kind of channel-based solutions that aren't purely peer-to-peer in the blockchain sense, like Lightning, that allow you to basically pipe, in theory, an infinite number of transactions into a crypto network, but they aren't as irrefutable as a purely Bitcoin published blockchain transaction would be. But I would invite you to go do some research on segregated witness or Lightning, and you'll see what's coming over the next few months. I'm going to go to this side. How about the person in the blue shirt, and then we'll come to the person right in front of him after that.
The resistance is always a question, and how quickly can a movement like this occur? And I was curious if the large banks where the money is housed could block connections to blockchain.
They could, but I don't think they will. Because a blockchain as a storage type is not something that they necessarily know when people are interacting with them. And when I say they could, I'm saying hypothetically, could you then regulate a certain business class that you are classifying when you're opening a bank account and then not serve all those customers? Well, you could, but why would you? You know, those businesses hold money in your bank and want banking services like every other business. And even if the product they sell may be different, as long as they're operating legally, you know, why would you stop it? And I think what we are seeing right now is big banks are harnessing the opportunity, and they're putting their money in it, and they're putting their time in it. And there are groups in these big banks that are likely bigger than my company, just looking at the opportunity and analyzing what their next step is going to be. So I think they're going to make a good move.
And there are also different flavors of blockchains, as the panel has alluded to. There are fully open blockchains, of which only two are noteworthy, and that's Ethereum and Bitcoin. And no matter, and I think only if the NSA and CIA gathered all their compute power could they possibly make some blocking of that network. So the open blockchains are not stoppable, if you will. For the permission blockchains, in which a consortium determines who participates within those permission blockchains, that's done through a contract, right? So the agreement is that if you are a particular regulated entity, you will participate within this, or you will be allowed to participate in it. And so there's that slight difference between the permission blockchains and the open blockchains, as far as who can block.
Yeah, and also I would just caveat that by saying the world is kind of bifurcating in this blockchain world right now between kind of the consortium bank-specific applications of blockchain, which R3 and Chain and Blockcypher are involved in, and then there's the companies that are doing public-facing, consumer-facing services that need access to the banking system. That's been a huge problem. Right, and for the same reasons that everybody else who's suffered from choke point has been suffering, those companies are no different. Right, bank accounts are being shut down. Companies who operate as an MSB, right, even when they have the licenses, in some cases aren't able to get bank accounts. It's getting better incrementally, but starting from a horrible place. Yeah, and I think the person in front had a question, and then the gentleman in the back, and then we'll come back over here.
So great presentation, thank you. I don't have the technical background to understand the elegance of Bitcoin or blockchain, but as a consumer, I'm trying to understand the benefits to all of us in this room. I actually don't find it that difficult today to wire money or send money electronically, and I'm trying to understand like how much better my life is going to be tomorrow in this blockchain world, and what actually improves. I mean, at the end of the day, if I want to send money to my neighbor next door, I get on the computer today or on my iPhone, and I could do it in seconds. So what actually improves?
I think for the consumer, not much. Consumers got it pretty good, let's be honest. And that's okay. Consumers should have it really good. And the initial applications to drive mass adoption of this stuff is in infrastructure. And it's really the businesses realizing new revenues maybe they wouldn't have, making it easier for them to get more things to a consumer and maybe underwrite that consumer or give loans or how it manages its own money. But at the end of the day, the consumer is going to get a button that says send it, and the bank's going to do whatever they need to do behind the scenes to move that. I think consumers' life's just going to keep getting better and better.
So I actually think that it's very difficult to wire money internationally. We have international contractors, and it's either they have to have a bank that's in the same consortium as the bank that I'm wiring money from, or I can't do it. I have to then physically send a check over. And in the additionality is if they have a bank which is in the same network as my bank, and I do manage to wire the money, it doesn't happen overnight. It costs $75 to wire internationally. It does take a number of days for it to clear, a number of working days, and it can be up to three weeks in order to clear. For sending internationally, so I'm going to tell a little story because I'm a mom of 2 kids, and when I talk about Bitcoin with my mom friends, they look at me as if I've dropped in from Mars. But so recently, I had dinner with one of my old colleagues, and she said, James, my son, he's still playing chess, and I said, oh, do you have a tutor? And she said, yeah, the U.S. tutors are extraordinarily expensive, so I went to go hire a tutor from Serbia because the Serbians are pretty good at chess. But there was no way that I could pay. We tried paying him via the regular banking system. We tried paying him via PayPal. And we resorted to Bitcoin because it was the easiest way for us to transact money for that Serbian chess tutor. And so I do think that as far as the rails are concerned for international payments, cross-border payments, there's nothing better than a cryptocurrency because it gets there in a matter of minutes at the most, and there isn't that $75 transaction fee on both sides, nor is there the time delay of 3 weeks.
Yeah. So this is my day job, so let me give you a little perspective on this. Okay, there are 7 billion people in the world. 80% of transactions for those 7 billion people still happen in paper cash. We all, maybe your kids are using Venmo today. Think about it from a messaging perspective. We used to send letters, we switched to email, we switched to text messaging, we switched to WhatsApp, your kids switched to Snapchat. Why? Right? We could still be sending letters to each other, or we could still be using email instead of Snapchat. Obviously, the technologies came along from a messaging perspective were incrementally better. Americans that wanted to get money to somebody else, $5 before Venmo came along, were getting that $5 there before Venmo. Right? But Venmo moved billions of dollars last quarter, people sharing money in real time because it's a better user experience. Abra is trying to create a global version of Venmo that for the first time would allow you to send $1 to any phone number in the world legally. Okay? We couldn't figure out another way to do it except to use the Bitcoin blockchain, but completely hide the Bitcoin in the background from the consumer by hedging the value of the Bitcoin to the consumer in real time. So now I now have a way to send money between any 2 phone numbers in the world in real time for free. That is not possible today via any banking system that I'm aware of. And so it's really hard to make the user experience easy and hide the complexity of blockchain and public-private key mumbo jumbo to a consumer, but we've proven that it can be done. And what you end up with as a result of that is unbelievable because, like I said, now I just know your phone number. I can send you $10 if you're in Serbia, and it costs nothing to do that, which was not possible 5 years ago. Okay. And I think we have time for one more question. So, eeny, meeny, miny, mo.
I have a mic over here.
Oh, well, okay.
Sorry, I was one step ahead of you.
Raise your hand with the mic. I can't. Oh, there you are. Okay, go ahead.
I'm curious if you could talk about the following. You've made references to the blockchain being unstoppable, and I think I'm in your camp. But as it relates to cryptocurrencies, there was a ruling by the IRS that said that cryptocurrencies are a commodity and therefore taxable if, as expressed in dollars, there'll be a tax owed on it. So I'm curious whether that is spoiling the party a little bit, and whether we have a situation where the US government, who is the issuer of, let's call it the fake currency, wants to keep control over the alternate currency, which is the non-replicable currency.
I don't think so. I mean, I'll let everybody else comment, but I spend a ton of time on this. I work with the governments as well, not only the U.S. government, but central reserve banks all over the world, central banks all over the world. I don't think that in of itself is going to stop cryptocurrency. Look, in its purest form, it's software. That's all it is, right? It's unstoppable because like BitTorrent, there's no central computer to shut down. Right, Napster was shut down because there was a central set of computers that you could turn off, and the index to find music was gone. Right, with BitTorrent, there is no server to shut down, which is why it's flourishing, regardless of what the DMCA and others think of that. The Fed simply needs a way to say, hey, if people are investing money in these ones and zeros, and there's more money coming out the other side, how should it be taxed, given that everything else that's analogous to that is taxed in some way? And I get that. Whether I agree with it or not, I get it. But ultimately, it's software, right? And I think that the regulation of the software comes into what happens when other people manage your keys in that software environment, right? And that's we call that a custodial model, right? Versus there's ways to manage, like Bitcoin keys, for example, where you're managing your own keys. That's like holding a dollar in your hand. It's a bare instrument. Governments are not looking to regulate that. They're looking to regulate what happens if somebody else is managing your keys, because if they steal your keys, they can steal your money. So, I get that that's where I think where most of the regulation in the consumer-facing aspect of this is going. But it's complicated because there's a lot of other non-consumer-facing aspects to this as well. And I'm sure you guys have a perspective
I
on
agree
this.
that it's not a form of control. The government had a question, I'm sure, which is, do we create a tax or do we create a prohibition? And when they say we're going to create a tax instead of a prohibition, it's an interesting compliment to what they're choosing to tax. And the government has also done a pretty eloquent job of finding ways of actually taking that new technology and dropping it into the regulatory infrastructure, and knowing that they need to create definitions where they lack. And if you look at things like FinCEN's ruling and guidance, they've really done a nice job with it. Yeah. And I think ultimately, if you take a step back, it's a compliment to the technology and the people working on those problems rather than an insult.
Yeah, I have nothing to add.
Yeah. The other thing I would say is somebody made a comment about banking and protection rules. So if you're a custodial Bitcoin wallet like a Coinbase or Circle in the U.S., Reg E rules apply, right? It's just, that's the way it is. But if you're providing somebody software to manage their own key on their phone, such that if you lose your phone, you've lost your money, there is no Reg E because you're your own bank, right? So it's it enables a different way of looking at managing money digitally versus that kind of traditional banking model. I think we're out of time, and I know we're going to be hearing from you some more in a few minutes. So thank you for your time, and enjoy the rest of the day.
Thank you.